So next up, we have Barton Gold. The company is building South Australia's next major gold producer, and I believe there's some silver there too. But to correct me if I'm wrong, we've got Managing Director and CEO, Alexander Scanlon. Thank you, Alexander.
Thank you to the team for having us. Barton Gold, I'll try to keep it pretty short. We've got a pretty large story that I try to put in a pretty small nutshell, so it's a little bit difficult. We are the leading gold developer in South Australia. We are pure play gold, pure play South Australia. We have consolidated every major historical gold asset in the region. So the eastern side of the Stewart Highway is where BHP has consolidated the IOCG province. The western side of the highway is where we've consolidated a 130-year-old gold province. We've now built this up into a 2.2 million ounce gold platform. We've crystallized this as sort of two development hubs that we're going to bring into operations. And we're now taking this through a staged development strategy to take this up to 150,000 ounces per annum of long-term production. And the strategy there is a staged development model where we are leveraging the existing fully permitted infrastructure that we have. We do own the only gold mill in the region to go into operations cheaply, re-rate our equity, re-rate our credit, start generating cash, and then develop our second large-scale expansion project. So the idea is a lower cost, lower risk, and low dilution model. That's something that we are known for. And we are looking at essentially targeting a much, much larger payoff with a much, much smaller investment. So what does that look like? Two stages of development. Stage one is leveraging our Central Gawler Mill into operations using mineralization from our Challenger and our Tarcoola projects. Central Gawler Mill is a fully permitted, fully licensed mill. We have 300,000 ounces of gold adjacent to the mill, some in higher grade historical tailings, and about 200,000 ounces of gold on existing open pit and underground development. So this is literally sort of walk up restart. And what we're going to do is we're going to break the development of that, or the reinstatement of that, into two phases. First, processing higher grade tailings, and then starting to blend in higher grade fresh ore. That de-risks the transition to operations and allows us to develop a nice smooth production profile where we start producing 20,000 ounces and then 35,000 ounces and then 50,000 ounces per annum, at which time we are then developing our second stage development project. That's the Tunkillia Gold Project. Now, Tunkillia is an asset that we actually focused on when we bought these assets about 6 years ago. It was a 600,000 ounce asset when we bought it. It's a large shear-hosted deposit. We've demonstrated that the mineral endowment there is much, much larger than was historically understood. That's now a 1.6 million ounce deposit. And we put out a study in May of this year demonstrating that it will be a very attractive 120,000 ounce per annum producer. Really interesting to this particular development project is that it has a central higher grade zone. And what that means is in the first year of production, we're not producing 120,000 ounces. We're producing about 200,000 ounces of gold. And the consequence of that is we are producing gold at less than 1,000 Australian dollars per ounce. So it's about a $400 million development project. You push $400 million into developing this project. In the first year, at a $5,000 gold price, we get about $800 million in operating profits out of it. The current gold price, well over $1 billion. So this is an asset that pays itself back more than 2 times over in the first year. An asset like that in operation today values the company somewhere between $2 to $3 billion. So what we're talking about is achieving the equity payoff of a $500 million investment for a tiny fraction of that upfront today with our stage one Central Gawler Mill. What does that mean for investors? Well, it means a pathway to a really big outcome with a very small amount of dilution. Again, this is something we are known for. We have a very tight capital structure. We have about 240 million shares on issue. We're about 75% owned by board, management, family offices, high net wealth, and institutional shareholders, which now includes Franklin Templeton. Franklin Templeton crossed with us this morning and paid a 15% premium to buy our shares at $125 per share. So what are they backing? Well, they're backing a strong platform. They're also backing a very strong team. Our team have several hundred years of experience finding, permitting, financing, building, and operating major mining assets. We have a particularly strong pedigree in South Australia and in gold. About half of our team come from Normandy Mining, which was based in South Australia and was the largest gold producer in the Southern Hemisphere in the 1990s, purchased by Newmont as a 2.5 million ounce per annum producer in 2002. So we are very well financed, excellent capital structure, excellent team. We know what we're doing, and we're in a region where we have deep, deep financial, commercial, and regulatory relationships. So for us, the next 12 months are going to be pretty exciting. We're going to be taking our stage 1 operation through a DFS for the start of production to define that plan. That will be done by March, and then we will be targeting commissioning of that mill by the end of 2026. In parallel, we are also now upgrading all of this sort of central higher grade zone in that Tunkillia development project to measured and indicated resources. This will essentially completely underwrite the financing of this project. We will then complete a pre-feasibility study and a mining lease application also by the end of 2026. So both of these projects are taking 2 very big steps forward during the next 12 months. And in terms of other interesting news, it happens that we've also made one of Australia's highest grade silver discoveries on the side. So in some of our work in the Tarcoola goldfield, which sits between these 2 projects, we had predicted a new gold-bearing structure. We drilled it, we were right, we made a gold discovery. We also drilled our second target there, and we drilled 6 meters at 4,700 gram per ton silver. That actually also has 13 grams of gold with it. So very, very interesting. We've done some more drilling. We've done some soil samples to basically demonstrate that that appears to have some growth. We're waiting on some diamond drilling results, but that could turn into something quite interesting, and it happens to sit right between a gold and a silver gold mill. The Tunkillia project will actually produce 2 ounces of silver for every 1 ounce of gold. So it's something that can act as very interesting high-grade blending feed for us. In terms of what's coming up across the next few months, well, we've got 3 different drilling programs underway: production drilling, resource upgrade drilling, exploration drilling. We'll be publishing a DFS for stage 1 production. We'll be publishing mineral resource upgrade for our stage 2 Tunkillia project. We'll be going to financing and really just transitioning towards production. And in terms of what that means for you, well, I think we've got a pretty interesting proposition. We're definitely very well financed. We are led by a very strong team. And very interesting things happen when you transition from pre-operations to operations. So I encourage you guys to have a look. Thank you very much. Enjoy.